someone is selling a digital product in an online streaming app in Canada. I'll keep it vague so you don't know who it is, because I think it's a very popular platform. Taxes are high in Canada, so I've been thinking about opening an LLC in the US. I was wondering, since I'm selling digital products, how would taxes work? And do I have to charge my customers taxes for buying digital products? I know that's a bit vague, but perhaps we can speak to the issues that are raised. Gentlemen?
Okay. There's a couple of things to consider right here. When we're looking at a non-resident providing, selling products into Canada or providing services, there's two-pronged approach that we do have to take. One is the corporate tax application, where we look at the permanent residents or the permanent establishment to see if they're carrying on business. But when we look at the sales tax, or what we call the value-added tax, which is the goods and services tax or the harmonized sales tax, the rules are very different. You may not have a permanent establishment per se in Canada, but because you're soliciting orders and you're selling into Canada, you would have to register for sales tax purposes, which basically leads you to a different situation altogether. So you do not have a permanent establishment. So from a corporate tax standpoint, you don't have to worry about it, or at least initially you don't have to worry about it, depending on how your business grows. But from a sales tax perspective, it is very important that you do have to register for GST or HST purposes. Now, they'll come up with a lot of new rules, especially the digital products, and it also depends on the software, the platform, where it is located, and all those things are to be considered. But in a nutshell, or at a very top level, you should consider registering your company for GST and HST purposes. Cole, you want to add something?
Yeah, sure. Absolutely. Yeah, sure. Thanks. So yeah, I'll touch it from very briefly from our corporate tax perspective. So as Bala said, you may not have a permanent establishment, but still some of the Canadian tax regulations apply in case you're considered to be doing business in Canada. So doing business in Canada per se is not defined, but CRA has certain criteria. They have, I think, listed 7 or 8 different things. So if you're kind of doing one of those activities in Canada, then you may be deemed to be doing business in Canada. Even if you don't have a permanent establishment, you still may have to register your business number in Canada and may have to file a tax return. Of course, knowing that, under the treaty, you may still not have to pay taxes, but that compliance would be there. So some of the criteria I can read out, the one which is at the top of my mind is that in case you're soliciting clients or business within Canada, even if you don't have a permanent establishment, even if you don't have, a physical presence in Canada, so that is considered one. If you're selling your goods and products through any agents in Canada. So that is another thing. So we don't have too much of specific information to your case, but yes, when you're looking at your sales in Canada, you should be aware that there could be, your tax filing requirements in Canada and sales tax, as Bala mentioned.
I'd like to add one other thing as well, because depending on where you're selling, we have the goods and services tax, which is the federal tax, and then the harmonized sales tax, because there are provinces like Ontario and New Brunswick, Nova Scotia. These provinces are harmonized sales tax, where you pay tax at a different rate, but they're harmonized with the federal. Then you also have to consider, depending on if you're selling into Alberta, for example, there you'd have only the goods and services tax at 5%. But if you sell in Ontario, you're going to have 13% tax rate. Quebec has its own tax, which is partially harmonized, but still you'd have to file the Quebec sales tax. So what happens is, depending on which province of Canada that you're selling the products to, you would have to register in that province as well for sales tax purposes. Just something to think about.
Thanks a lot for that, gentlemen. So the person who asked the question, if it is you're thinking about leaving Canada and somehow, of course, legally avoiding taxes, I think what the gentlemen have explained is that it may not necessarily be the case that you would avoid, of course, what you'd want to do perhaps is engage either these professionals or others suitably qualified. And perhaps what you want to do is some sort of analysis that shows, okay, if I do stay in Canada and I continue my activity, this is obviously the steady state. But if I were to move to the US and operate from the US, what would the savings be, considering that you would still have sales tax liabilities and potentially still have corporate tax liabilities, plus you have to deal with the Americans. So as to whether that's a good move, I'd say you probably want to do some deeper analysis. Okay.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.